Our chart of the day we need to talk about. It's Lululemon, and it's getting hammered. At least it was. There it is on your screen right there. The stock's down 6% as we have this. That's a new 52-week low, by the way. So they announced the departure of their chief product officer. This would be the 6th consecutive day of losses, 4 straight weeks of losses. We had Matt Boss on yesterday. He's the top retail analyst on, we had him on Closing Bell from JP Morgan. He's overweight the stock. He's got a $500 price target, and he defended the name. I want you to listen.
On a multi-year basis, I think that Lulu can drive the double-digit top-line growth, which would equate to a mid to high teens bottom-line grower. You have international that's still in early innings, less than 20% exposure to the international markets. You have men's that can still double from here. Accessories is still an opportunity. And the TAM, the total addressable market for casual, I mean, there's just no question that it's larger on the other side of the pandemic.
Okay, that's Matt Boss. Joe used to own the name.
We did.
Is it worth defending here? Or if you own that stock, should you be seriously concerned?
I don't think if you own the stock, you should be seriously concerned. I do think, as you and I have discussed, there is the potential that it's beginning to lose some market share to some of its competitors itself. But from the perspective of, has the stock cheapened up enough relative to its growth potential, I think the answer to that is you're getting close to a trough. The concern that you might have in buying the stock here is that you're sitting with a stock that you're going to have to bide your time with, that over the course of the coming quarters, it's going to have to prove that it is not losing market share. Over the coming quarters, it's going to have to prove that you see the acceleration in revenue growth. So candidly, I don't know that I would, at $302, say, well, the stock's got another 15 to 20% to the downside or 15 to 20% to the upside. I think it's rightfully repriced itself lower to where it is right now, and I think it could potentially be dead money over the coming quarters.
Yeah, because what if Matt Boss, he's not naive to the story, obviously. He talked about moderating growth. If it's not going to grow as fast as it was before, does it deserve the same degree of premium that the stock was getting before? I think that's highly debatable. Do they have a moat around what they had or, continue to have? There are other competitors out there. You talked about market share. There are others who are producing stuff that looks pretty similar. It doesn't cost as much. I'm not even thinking. I'm talking about, non-public
private labels.
I got you, but I think the point still stands, though. I mean, look at how much of a tough time Nike has had. Yeah. And while it's not a direct competitor, they're kind of comparable. Joe, I think you analyzed it right. I mean, this is guilty until proven innocent, just like Nike.
This is the perfect banner that we put on here. Is the Lululemon bull case lost?
For now, it is. For now, until it's proven otherwise. I hope they do prove it otherwise, because I've got consumer exposure elsewhere. But look, to the extent that somebody is worried about the consumer, you look at things like Nike, like Lululemon, and you say there's a problem. You look at something like Dick's Sports, and I know it's not the direct comparable, but you say, well, maybe the consumer is fine. I mean, there are.
I don't think this is a referendum. Frankly, I do not think this is a referendum on the health of the consumer.
Okay, good.
Well, I think it's a referendum on the health of Lulu.
Well, I think it could be a referendum on the specific demographic that shops at Lulu.
Listen, there's some financial metrics within the company. I'm looking at it right now. So let's look at revenue growth in the last quarter, 15%. Revenue growth over the last 2 years, 25%. Revenue growth over the last 3 years, 30%. Moderation there. Balance sheet, still strong, looks good, but softening up a little bit. This is the worst performing stock out of 52 consumer discretionary names in that sector. That type of performance doesn't recover very quickly. So it is absolutely repricing itself to a level where it's got to find a base and it's got to find a reason and a catalyst to move higher.
Matt Boss told you one of the reasons will be they're just the beginning of international growth. Their total addressable market, according to him, is still massive, and it's going to be much bigger on the backside of the pandemic. But that doesn't necessarily speak to their revenue growth rate. They may be available in more markets, blah, blah, blah. But I don't know. You go around, you see more competitors, and it's obviously taken a toll.